This is the first news conference since our chair, Mr. Duncan Owen, takes the office. May we now invite Mr. Owen to give an overview of the interim results for the year 2024 to 2025. Mr. Owen, please.
Thank you, everyone, and good afternoon. Welcome. We okay? No. Better. Can you hear me now? Great. Great. Thank you, everyone. Good afternoon. It's my pleasure to join you all here today. Is that okay? Can everyone hear? Are we okay? Good, thank you. No problem. Good problem. I'll start again. Thank you and good afternoon and welcome, everybody. It's my pleasure to join you all here today as the new chair of Link, which remains a leading, independent and fully integrated real estate investor and manager with a proven track record across the APAC region. Our goal is to be the trusted partner in APAC for our unit holders, of course, and for various other investors and stakeholders, and continue to build upon our track record, which has now been built for nearly 2 decades. Link REIT is not an ordinary REIT, because it's both an investor and manager, as well as an integrated platform. The opportunities to create new sources of growth lie in developing these 2 complementary business lines, increasing the quality and resilience of our earnings through further diversification of the Link REIT portfolio, as well as expanding the investment management business. I'll let George elaborate further when he covers this in the strategy section. On to the macro overview. The global real estate market is encountering many crucial pivot points at the moment, driven by multiple macroeconomic transitions. These include themes all well known to us, such as demographic changes, geopolitical challenges affecting trade flows, climate change and sustainability, and of course rapid technological advancement. These transformations influence Hong Kong's economy and of course the real estate investment landscape across the APAC region. Though the outcomes of these shifts remain unknown, they signal heightened uncertainty and the necessity for all businesses such as ours to adapt in the face of them. We've yet to fully appreciate all the consequences of the unprecedented quantitative easing after the global financial crisis and now its rapid reversal over the last few years. This has posed challenges for individuals, companies and national budgets. As interest rates rose, many faced declining real incomes, leading to reduced consumer and government spending. Real estate is a non-homogeneous asset class, and it is essential to not only maintain the scale and liquidity of the Link REIT, but also to ensure that we have a compelling business model and strategy that demonstrates both resilience as well as having the capacity to deliver above-average returns and growth. Turning to the outlook, the final message from me before I hand over, really looking at the macroeconomic outlook, the key word for us remains uncertainty. Although the Federal Reserve and other global central banks have started their interest rate cuts, there remains the need to challenge and the balance of inflation with economic growth, thus avoiding recession. As such, the pace and breadth of these rate cuts are expected to be gradual and uncertain. The presidential election in the US is likely to add to further long-term uncertainty, as it will take time for the implications of the election result to play out. Furthermore, the structural changes from Greater Bay integration has caused changes in consumer behaviour. Correspondingly, it's led to retailers to review and adapt their strategies, and that has an impact on all of us. However, there are some bright spots, which include the economic stimulus in mainland China, with the policy easing and the reversal of austerity. Meanwhile, in Hong Kong, easing interest rates are likely to benefit the real estate market in the medium to long term. There are also some early signs of stabilisation and indeed rental growth in the best-in-class assets. Also, the price dislocation has resulted in investors beginning again to explore opportunities because some assets may provide above average risk-adjusted returns from this pricing point in the cycle. Thus, whilst the macroeconomic backdrop requires caution, opportunities will arise for investors with differentiated operating platforms such as REIT. Thank you everyone for attending what's my first interim results presentation. I'll now pass the floor to George to talk about the interim result highlights. Thank you.
Thank you, Duncan. I'm pleased to present our financial performance, which we announced earlier today. So despite the challenging retail environment in the key operating markets, our commitment to operational excellence in capital, asset, and portfolio management has yielded solid results. Revenue and NPI increased by 6.4% and 5.8% year-on-year, reaching a result of 7.153 billion for revenue and 5.359 billion for our net property income, respectively. This growth has mainly attributable to the new contribution from the recent acquisition of an additional 50% stake at Link Plaza Qibao, along with the improved performance across most of the operating markets. Accordingly, the total distributable amount increased 4.3% year-on-year, while DPU grew 3.7% to 1.3489 dollars Hong Kong. As for the NAV per unit, it fell by 4.6% year-on-year to Hong Kong dollar 66.8 due to a decrease in asset valuation, largely from cap rate expansion. Meanwhile, net gearing stood at 20.6%. Throughout the reporting period, we made significant progress in optimizing the portfolio. Hong Kong saw a 2.2% year-on-year increase in total revenue and a 2.4% year-on-year growth in net property income, driven by consistent performance in the retail sector. We are also pleased to report an improvement in the mainland China operation, where revenue and NPI surged by 39.2% and 37.6% year-on-year. Primarily contributed to the new contribution from the completion of the acquisition of the 50% at Link Plaza Qibao. And if excluding the acquisition, revenue and NPI growth would have been 6.5% and 4.9% year-on-year in Hong Kong dollars. Moreover, the benefits of our diversification strategy became evident as the healthy operating matrix in Singapore and Australia helped counterbalance the challenges we faced in Hong Kong and mainland China. On the asset enhancement front, we have completed 2 projects in Hong Kong, achieving return on investment of 17.2% and 19.9%. This accomplishment reinforces our commitment to maximizing property value in the core markets. In mainland China, we executed asset enhancements at Link Central Walk, yielding a return on investment of 43.8% and significantly improving the asset's overall performance. This outcome underscores our robust asset management capability. I would also like to highlight our robust financial position. We have maintained a low net gearing ratio of 20.6%, which provides us with ample capacity for growth. Moreover, through active capital management, we are able to manage our average all-in borrowing costs at a favorable level of 3.69%. In a nutshell, our focus on diversification, strong asset management capabilities, sound financial position, and strategic cost management put us in an advantageous position to cope with the evolving market conditions. Turning our attention to the outlook for our operating markets, in Hong Kong, the population have returned to 2018 level, and the recent expansion of the Top Talent Pass scheme is expected to provide additional boosts, driving demand for consumer spending. Hong Kong's economy and property market are poised to benefit from any interest rate cuts, and this development is expected to stimulate investment activities and boost consumer spending. alongside the potential easing of the Hong Kong dollar exchange rate, thereby boosting the economy. Adding to this positive momentum, the central government launched an array of stimulus packages in September and October, which are expected to reinvigorate the Chinese economy. So following the announcement, the Hong Kong stock market also saw a rebound. The recent policy address in Hong Kong proposed a series of property market policies to enhance the overall market stability. These measures aim to create a sustainable growth path, ensuring long-term benefits for homeowners and investors alike. And in addition, the improvement in employment income through potential minimum wage adjustments is expected to boost consumer sentiment. In the mainland China, the PBOC lowered both deposit and loans rate. This measure helped to inject liquidity into the market by boosting borrowing and investment activities and thereby sustaining economic growth. Furthermore, adjustments in housing policies such as lowering mortgage rates, reducing down payment ratios for second home buyers, and relaxing certain purchase restrictions aim to stabilize the property market and promote long-term growth. Meanwhile, the low inflation environment is conducive in keeping business and consumer costs in check. Although the full impact of these policies in China will take time to manifest, early signs of improvement are visible in Q4 24 GDP, Q3 24 GDP data, where industrial output and retail sales gain momentum. And looking at the current economic landscape of our other markets in Singapore and Australia, September 2024 total retail sales was positive, and F&B services grew moderately by 1.6% year-on-year in Singapore. And elsewhere, the sustained growth in new PMI orders, driven by recovery in the electronic sectors, bode well for the economy, which would have a positive effect on consumer sentiment. In addition, labor market dynamics, including an influx of highly skilled and therefore high-income foreign workers, as well as low unemployment, are supportive of consumer sentiment. In Australia, the minutes of the Reserve Bank of Australia indicates that policy easing is not expected in the near term due to persistent inflation. Nonetheless, consumer sentiment showed improvement of 6.2% in October 2024, as indicated by the Westpac MI Consumer Sentiment Index, largely fueled by reduced concern over potential rate hikes. Additionally, a stable unemployment rate reinforced the overall economic stability in the region. Now let me just hand over to Greg, who will share with us an operational update.
Thank you, George, and good afternoon, everyone. And firstly, we'll examine the performance of the Hong Kong retail sector, where revenue for our Hong Kong operations increased by 2.2% year-on-year. Our portfolio occupancy rate remains stable and robust at 97.8%, underscoring the resilience and strength of our essential needs-focused trade mix, even in the face of very challenging market conditions. Rental reversions for this segment experienced modest growth of 0.7%. The average unit rent edged up slightly to $64.50 per square foot, compared to $64.40 in March 2024. Now we'll shift our focus to the performance of retail sales here in Hong Kong. And during the reporting period, the ongoing effects of changing consumer habits and unfavourable currency trends continued to dampen overall retail sales growth in Hong Kong. In line with market trends, Link's portfolio tenant sales declined by 4.3% year-on-year, whilst the broader Hong Kong market fell by 8.8% year-on-year. When looking at the individual trade mix, food and beverage remained relatively resilient, experiencing a modest decline of 0.7%. However, supermarkets, and in particular foodstuffs, categories continued to underperform slightly against the Hong Kong market, while general retail declined by 6.6%. Given these developments, it's crucial that we continue to respond and we remain open to optimising the portfolio as and when suitable opportunities arise. Now looking at occupancy costs, where we observed an upward trend during the first half of this financial year, although our occupancy costs remain sustainable at 13.1%. And by trade mix, F&B and supermarket and foodstuffs fell within the lower range at 13.1% and 12.1% respectively. And occupancy costs for general retail stood at 14.4%. In response to the challenging market landscape, we've increased the leasing efforts to capture emerging market demands and improve the curation of our tenancy mix across our portfolio. In the first half, we signed over 300 new leases, showcasing our ongoing leasing efforts. Of this, we introduced 118 new brands to our portfolio, alongside 185 existing businesses expanding further with us. And this has been critical in maintaining market relevance across our portfolio. By strategically cross-selling brands between our Hong Kong and mainland China portfolios, we've significantly boosted customer engagement. A notable success story is Munchin, which debuted its first store in Hong Kong at Choi Ming. Additionally, we've continued our leasing focus on capturing emerging tenant demands and trends, such as pick-up service points and 24-hour fitness centres, to attract more foot traffic and enhance our offerings. This period, demand for leasing from areas such as education and interest classes, specialty restaurants and family entertainment venues were most pronounced. And as for our Hong Kong car parking business, we experienced a 1.4% year-on-year revenue increase. Although parking ticket sales declined, this was offset by increases in parking tariffs. And we're focused on staying attuned to market trends and devising strategic plans to sustain the performance, including the rollout of the new car park management system, which I'll talk about now. So very recently, we've completed the digitalisation of our car park management system to enhance productivity. Within just 4 months, we've transformed over 56,000 car parking spaces across our 121 car parking facilities, encompassing more than 500 lanes, with the introduction of cutting-edge AI and cloud technology systems. New features include convenient car park payments via multiple e-platforms, including LinkUp, and digitised customer service to enhance customer experiences. Additional upgrades such as licence plate recognition and improved vehicle traffic efficiency are designed to offer our customers a smooth and convenient parking experience, thus driving footfall to our car parks and subsequently our malls. Furthermore, we're currently exploring similar enhancements across our operations to uphold our commitment to operational excellence. Enhancing the underlying positioning of our assets is an integral part of our DNA here at Link. During the reporting period, we completed 2 asset enhancement projects aimed at boosting asset performance and returns. The capital expenditure pipeline currently in planning and pending statutory approval stands at over 657 million Hong Kong dollars. Asset enhancements recently completed and currently underway involve a combined capital expenditure of 167 million Hong Kong dollars. The 2 projects, namely Fuxin and Sao Mau Ping, were completed in the first half of the year with capital expenditure of 37 and 55 million Hong Kong dollars respectively, yielding returns on investment of 17.2% and 19.9% respectively. We've proactively engaged in asset enhancements to identify and capitalise on opportunities that elevate operational success. Recently, we refurbished the 3rd floor space and the children's playground at Sao Mau Ping Shopping Centre. This involved relocating the former Department of Social Welfare office space and transforming the roof garden into a welcoming children's playground. Our strategic tenancy remix now features a clinic, light refreshment options and an F&B area with views over the new playground, thereby enriching the offerings to meet community needs and drive rental uplift. The carefully planned arrangement is effectively attracting more visitors to the 3rd floor, increasing footfall and overall engagement. The project, as I mentioned before, involved a capex of 55 million and yielded a return on investment of 19.9%. And looking at this children's playground in a bit more detail, previously it was a very unappealing area and it's been transformed into a vibrant destination through this placemaking initiative. And the revitalised space now boosts the rooftop outdoor area featuring the Geometric Wonder Zoo, a captivating geometric and animal theme park. It offers a variety of exciting amusement facilities alongside an educational zone where children can explore and learn more about animals. We aim to replicate this successful approach to other suitable locations to ensure sustained growth and continued operational excellence. Beyond physically enhancing our assets, we're also committed to investing in green initiatives and creating new revenue streams where possible from these efforts. One example is we've entered into a Build, Operate, Transfer, or BOT service agreement with CLP for a series of solar generation systems, where CLP will cover the capital expenditure for building these systems and we will share in the feed-in tariff income according to a predetermined ratio. All electricity generated by these solar systems will be purchased by power companies at current tariff rates. Additionally, we plan to expand our solar generation beyond what we have already delivered and what the agreement covers, allowing us to sell the generated power at the full current tariff rates, further establishing a new revenue stream. Now we'll move on to our international portfolio and we'll start with Singapore, where our retail assets, namely Jurong Point and Swing by Thomson, are performing very well. This is underpinned by steady suburban demand, with shopper traffic having recovered to pre-pandemic levels and solid occupancy rates of now 99.8%, with continued positive reversions at a very healthy 18.9%, as seen across the portfolio. Taking a look at trade categories which drove the sales performance, this includes food and beverage, beauty and wellness, which have held top positions. In terms of tenant demand, Singapore has become a critical hub for overseas retailers and F&B operators, especially for Chinese brands aiming to capture the broader Asian market. These present us with new opportunities to introduce new tenants to our assets in Singapore. For our assets in Australia, the portfolio there remains consistent in its performance. Continued improvement in tenant sales, higher footfall and firm occupancies of 99.1% have resulted in boosting the appeal of the malls to tenants and customers alike. Continued new openings of unique brands are contributing to this performance. The trend of increases in overall CBD activity has sustained over the last year, arising from higher tourist arrivals and a pickup in office workers returning to the CBDs. In addition, the new Sydney Metro train line, and namely the Gadigal train station on Pitt Street, opened in August of this year, which has improved connectivity into the inner city, and it's only a short walking distance to the assets, thus enhancing their strategic locations. Finally, with our international office portfolio, which encompasses the Australian assets as well as the Cabot in London. And overall, a relatively long WALE was maintained at 4.7 years, while portfolio occupancy across these assets was 90.2% as at the reporting period. Initiatives taken to improve occupancy includes new speed-to-market speculative fit-out works, as well as the lease-up of completed speculative suites at our property at 347 Kent Street in Sydney, which was completed late last financial year. These have been supported by the flight to quality trend, whereby core precincts have seen positive net absorption over the period. By virtue of this, maintaining a high-quality portfolio enables us to capture tenant demand driven by growth in white-collar employment and the need for more collaborative workspaces. On a broader basis, the Sydney CBD has the added advantage of having a low pipeline of new supply in 2025 and 2026, which is expected to support current market occupancy rates. I'll now pass over to KS. Thank you.
Thank you, Greg. Good afternoon to all of you. Let's shift the focus to mainland China portfolio. In first half 2425, despite ongoing consumption downgrades and a challenging economic landscape, fashion and accessories, F&B and groceries, targeting the main mass market, experienced strong leasing demand. Occupancy remained solid at 96.4%. However, portfolio rental reversion turned to negative 3.2%, primarily impacted by one more, Beijing in Zhongguancun, which is currently undergoing major tenant remixing and repositioning. Excluding Ling Plaza Zhongguancun, rental reversion will registered a growth of about 6.5%. The portfolio rental reversion is expected to level out by end of this financial year. In response to the evolving retail landscape and to maximize asset value, we have started enhancing the malls in Beijing and Shanghai. Zhongguancun and Qibao will focus on a portion of basement area and reposition specific floors respectively. An estimated capital expenditure of RMB 25 million has been allocated to the two AEIs with a target completion date in late 2024. Additionally, we have two large-scale projects undergoing AEI with a combined capital expenditure of RMB 80 million, slated for completion in mid-2025 at Tianhe and Tongzhou. We have been actively making efforts to pursue operational excellence and enhance overall performance. The recent renovation of the basement area at Link Central Walk showcases our capabilities in navigating market challenges and transforming underutilized spaces into valuable assets. At Link Central Walk, our proactive asset management team developed a strategic plan to negotiate with Carrefour, which began scaling back operations during the COVID. Through ongoing discussions with the tenant, we successfully downsized the space and ultimately terminated the lease, thus allowing us to reposition the basement. Our swift reaction to the shifting market conditions has resulted in increased rental income, introduction of more productive tenants, and a more vibrant shopping environment. The renovation was then completed and unveiled in July this year with a capital expenditure of 24 million RMB and yielded an ROI of 43.8%. A broader range of options is now being offered to shoppers by bringing over 50 new tenants to the basement. In the past 3 months, the mall has experienced a significant increase of over 30% year-on-year footfall and over 60% year-on-year tenant sales. The asset enhancement initiative in the basement area of Link Plaza Qibao in Shanghai also exemplifies the commitment to operational excellence. Collaborating with Vanke, we transformed the space of a low-performing anchor tenant over a period of 2 years, which previously offered limited options to shoppers and turning it into a vibrant area offering a diverse array of F&B options. This initiative not only elevated the shopping experience, but also attracted a broader customer base, driving increased footfall and customer satisfaction. The rental rates then more than doubled following the renovation, resulting in an ROI of 106%, with a capex of 5.2 million RMB. A total of 26 new tenants were introduced to this new space, again bringing a diverse range of offerings to cater to customer preferences, including grab and go, specialty restaurants, and unique dining experiences. Turning to logistics, we continue to face challenges in the market, particularly with the mismatch of supply and demand in the Yangtze River Delta area. This year, the Jiaxing market experienced a significant influx of supply. Hopefully, it's expected to be absorbed in the near term. Despite these challenges, we observed steady improvements in occupancy rates, primarily driven by strong leasing activity in the Greater Bay Area. Overall occupancy rate grew to 98.2% from 96.2% in March. Moving on to capital management. Our strong financial position is well supported by a healthy balance sheet as shown in the key metrics here. Net gearing edged up marginally but remained low at 20.6%, while the average borrowing cost remained competitive at 3.69% despite interest rates staying elevated. EBITDA interest coverage improved to 4.8 times. Fixed debt ratio reduced moderately to 66.4%, in view of the beginning of the easing rate cycle. This is expected to decrease progressively given the rate cut outlook. The disciplined approach to debt management with diversified sources of capital across debt instruments has helped us achieve a competitive average borrowing cost of 3.69%, as well as maintaining our robust credit ratings. Having repaid some debt during the period, the debt balance reduced to 55.6 billion Hong Kong dollars. As such, we now have only a balance of 2.4 billion Hong Kong dollars due for refinancing for the rest of this financial year. The robust credit ratings achieved alongside the debt management has reinforced the ability to assess capital favorably at competitive financing costs. On valuation, portfolio value declined by 2.1%, half on half. Among the sectors, the office segment experienced the most significant cap rate increases across all regions, while the cap rates for retail in Singapore and Australia remain unchanged. Other regions encountered varying degrees of cap rate expansion. Additionally, logistics sector in mainland China also saw an expansion in cap rates. Next, I'll pass the floor to George to talk about the strategy update. Thank you.
Thank you, KS. To begin with, let's look at an overall view of Link REIT portfolio. It is mostly weighted towards Hong Kong at 74%, followed by mainland China. The international portfolio consisting Australia, Singapore, and the UK accounts for 11% of the portfolio value. Breaking down the portfolio down by sectors, retail accounts for about 70% of the portfolio value, followed by car parks and related businesses at 20%, and office and logistics are collectively about 10% of the portfolio. So over time, seeking further diversification and growth under Link 3.0 would help us to strengthen the portfolio with a better balanced exposure across key APAC markets, enabling us to generate attractive risk-adjusted returns for our unit holders. Let me touch on the Link 3.0 strategy in this slide. Providing you a little bit of detail here, the need to evolve our corporate strategy is driven by an increasingly uncertain and challenging market due to persistent long-term structural changes, which Duncan has highlighted earlier. Building on these, we aim to be a REIT plus investment case to overcome the market challenges such that our returns are resilient against market cyclicality and are able to deliver above average earning growth. Broadly speaking, this is to be attained through building our own capabilities and track record built over almost 2 decades. The way forward would be through active management and further diversification of the Link REIT portfolio, and these are vital to enhance resilience and ensure the portfolio achieve a balanced exposure across key APAC markets. With these in mind, accretive investment opportunities are being considered across geographies and asset classes as we monitor regional repricing trends and investment theses. We see opportunities in Australia, Japan, and Singapore due to their relatively low investment in risk and abundant liquidity. Meanwhile, the evaluation of potential asset recycling is ongoing for divestments. In summary, a further strengthened portfolio with a better balanced exposure across APAC will enable us to generate attractive risk-adjusted returns for our unit holders. In addition, we also aim to expand our investment management capabilities under Link in our target APAC markets. This would enable us to work with and provide services for third-party capital partners. Finally, it is worth remembering that while we have laid out our plans, the changes from the strategy will take time to bear fruit, and we have the evolution by upgrading management team, refreshing the board, realigning our processes, and upgrading our systems. Building on our strengths and executing the strategy organically, inorganic opportunities will also be selectively and prudently evaluated to accelerate the development and growth of Link REIT portfolio as well as our investment management capabilities. We'll stay vigilant, agile, and adaptive to navigate risks and seize opportunities ahead. Lastly, here are the dates for payment of the distribution with a scrip election for your information. The landscape is ever-changing and shifting, and along with it, the different challenges and opportunities in the markets and sectors that we operate in. Our focus on continual optimization of the portfolio, in addition to its diversification, has paid off in the form of its resilience. This has enabled us to continue to provide our unit holder with a stable return and sustainable long-term growth, despite external headwinds. Under Link 3.0, we aim to create values for unit holder, and this is to be achieved by diversifying the Link REIT portfolio into APAC and other asset classes, as well as expand the investment management business through providing services for third-party capital partners. As we embark on this long-haul journey, we will continue to focus on the interests of unit holders as well as alignment with capital partners and other stakeholders as well. Now let's move on to the Q&A session.
Gentlemen, thank you for the presentation. We now move on to the Q&A session. Please raise your hand if you have any question, and before asking any question, please identify your name and media organization you represent. You can submit your questions online as well. Due to time constraints, please ask no more than 2 questions at a time. Questions pertaining to the financial results will be handled first. Other questions will be taken later if time allows. 而家係答問嘅環節，傳媒嘅朋友可以喺發問嘅時候先舉手示意，同埋話俾我哋聽你嘅名同埋代表嘅傳媒機構。你亦都可以透過網上提問。由於時間關係，我哋希望每次都唔好發問多過2條嘅問題。我哋亦都會優先回應同業績相關嘅問題，其他問題就要喺時間許可嘅情況之下呢，容後處理嘅。多謝大家合作。咁我見到有啦，可以台下嘅同事睇第咪。唔該。
你好 ，Cable 嘅 Mimi。咁首先都想問下啦，即係本港零售物業嘅組合。商戶嘅銷售係按年下跌啦，咁見到全數行業都係錄得跌幅嘅當中，咁北上消費影響有幾大呢？而直至今個月為止啦，其實有關影響有冇進一步去加劇？咁第二呢，就係見目前啦同商戶續租嘅進度係點呢？會唔會都考慮去減租同商戶去共度時間呢？想用廣東話回答嘅，唔該晒。
多謝你嘅問題，我都或者叫Greg 先回答一次，我再用廣東話答。
The first question with regards to the sales decline, what we have noticed in the last or the second quarter of this first half is that the decline has reduced. So we reported at the blackout briefing our first quarter results. And our sales decline at that point in time was 5.8%, and we're reporting today that the first half is 4.3% decline. So the decline is starting to temper down. I think a part of that is the slowdown of escape expenditure to the north and traffic into areas such as Shenzhen. So we are observing that that is starting to moderate, albeit it is still occurring, and we acknowledge that part of that may well be structural. With reversion, maybe George, do you want to take on the first part, or will I keep on going?
We'll keep going.
Okay. Reversion and dealing with our tenants is something that we always do, and Link handled the situation during COVID very effectively, where we provided support to tenants as required, and we will continue to support our tenants in a variety of ways. Rent is not the only solution. So our relationships with our tenants is a priority for us.
所以頭先Greg 已經提過啦，即係喺零售個銷售個數字的確係有下降嘅，咁但係嗰個下降幅度咧，第二季已經係比第一季個下降幅度係減少咗。咁我哋亦睇得到，即係雖然北上消費呢個係一個即係相信都既定咗嘅一個潮流啦，咁但係嗰個數字亦係穩定咗落嚟啊！咁相信大家嘅習慣調整咗之後，咁未睇得到一個再增加啦。咁但係對於尤其是北區嘅消費咧，的確有影響嘅。 至於同租戶嘅即係咁多年，我哋領展都係有一齊用唔同方法去支持我哋啲租戶。喺每一個行業都有一個既定嘅即係適合嘅租金同埋佢哋營業額嘅比例。咁所以我哋都有足夠嘅數據去研究喺咩情況之下需要點樣支持我哋嘅租戶。咁當然喺零售環境有挑戰嘅某一啲嘅行業，咁我哋會希望可以保持得到佢哋嘅一定嘅存在。當然我哋喺你見到租客嗰個retention 即係留低嘅租客嘅比例咧，都差唔多80%到。咁當然喺我哋另外一個目標，你見到嘅就係保持到一個好高嘅出租率。咁呢個出租率亦係幫到我哋喺個總收入嗰度有提升。咁所以雖然喺租金嘅調整方面有可能有啲挑戰，但係保持到一個出租率，亦代表即係好多租戶咧都希望嚟到領展嘅商場度運作。
Thank you, gentlemen. There's a question.
你好，我是中国基金报的记者。就在刚刚哈，美国的大选的结果出来了，然后特朗普当选就是拿了过半数票。那我想问一下，就是这个会对宏观经济以及未来的这个息口的走势会有什么样的影响？然后对于领展未来的这个业务，譬如说并购啊，还有你们的未来的这个收益率会有什么样的影响？谢谢。
I'll take that as the first part of the question. I'll hand over to George in a moment. I think the first key message about the US election is it will take some time to play out, as I said at the start. I don't think there will be any dramatic changes that would impact on our strategy. Our strategy is one of evolution, not revolution of the company, and continuing to build on the foundations that we've had. I also think if it is President Trump now, we have already, of course, had a previous occasion where he's been president, and the company did well during that period of time. George, would you like to add anything?
Well, without guessing his policies, 我用廣東話先答啦，咁然後再嘗試下用普通話啦嚇。咁利息嘅走勢其實咧喺2023年嗰時候，我哋都即係做咗個預算，咁當時已經覺得利息係會有長期喺一個高位嗰度，未必咁快會落嚟。咁而家都過咗差唔多2年啦，我哋都睇得到利息咧都係持續喺一個高位。咁留喺一個高位度咧，有幾個影響啦。當然係對於我哋嘅消費者佢哋嗰個譬如供樓啊個負擔啊之類，點樣會影響咗佢哋嘅消費意欲啊？咁呢個我哋一直都有留意啦。第二對於我哋嘅租戶佢哋自己嘅借貸成本啦，咁呢啲都會影響得到營運嗰個能力啦。咁去到利息升咗咁耐，亦會影響到一啲物業投資者或者發展商佢哋揸住嘅物業佢哋嘅成本亦提高咗嘅。咁會唔會呢個令到有價格嘅調低啊，令到有啲併購嘅機會啊？咁呢個我哋係密切留意住嘅。咁當然有好多時候我哋都咁講啦，即係如果有呢啲咁樣嘅交易嘅，我哋都會盡早去公佈啊。咁但係未有任何可以講得到嘅一啲項目啦。咁所以領展一直都係有喺唔同嘅地區去留意一啲可收購嘅項目，或者考慮一啲我哋自己嘅物業啦，攞出嚟做一個資本嘅調換啊，咁賣咗又換新嘅物業啊咁樣。我諗做地產嘅有個好處就係好多時候唔係淨係睇宏觀嗰個情況， 咁有可能係某一個區、某一個商場係值得投資，同嗰個市或者嗰個國家未必因為慢咗落嚟而嗰個商場唔好，因為好多時候我哋真係落到去每個場周圍嗰個區人口嘅增長嗰個年齡消費能力咁樣去即係好詳細咁去研究，咁所以我哋相信都仲會有一啲收購嘅機會啦，我哋覺得會未來我哋可以繼續考慮。
Thank you. We received a question online. Link's past efforts in diversification seem to have produced good results. How would you further advance your diversification strategy?
Thank you. I think it is very much evolution continues. The strategy for diversification has been very clear with the company over the last few years and before COVID. We've seen that continue. There are clear target markets that the team has highlighted, and that really is to continue to improve the quality of earnings of the company, which are the obvious benefits of diversification. George, would you like to add?
No, I think we just keep doing what we're good at. I think the one point I'll add is we've been adding to our capabilities, adding to the team at both at the management level and at the board, hoping that we'll make even better decisions as we go forward.
Okay, thank you. 台下仲有問題嘅，各位。
你好，經濟日報就想問翻，即係頭先都話即係第二季個零售租戶銷售額有個下跌幅度減細啦。咁我想問，即係譬如上個月11黃金週嘅時候，即係其實香港你哋嗰個租戶嗰個零售額有冇話即係有個比較大嘅反彈啦？咁同埋即係可能預期下半年嘅話，嗰個跌幅其實會唔會繼續收窄啦？第二就想問翻個續租金調整率，即係上半年見到可能係0.7% 啦，咁全年嘅話其實會唔會都 keep 到個升幅咧？因為見到即係上半年嘅升幅都比較細嘅。咁另外就都想問下，即係之前即係領展一直都話會即係尋找呢個即係資本合作伙伴啦，即係想問翻下，即係而家即係喺利率下降嘅環境，其實會唔會話喺呢一方面都會移咗去揾呢啲 partners 嘅咧？唔該。
I'll talk to the question on sales and reversion. So, do we expect a big did we see a big rebound from Golden Week? No, we didn't. I guess the purpose of our malls is predominantly to service local residents in their local catchments for everyday needs and goods and services. So, what we have seen is more of a general stabilisation of performance and footfall, and the slide that we have up on the screen here shows that in comparison to the broader Hong Kong market, over the period from the time of social unrest in 2018 and 19 to today, the Link portfolio sales are largely back to that level, whereas the Hong Kong market more broadly is only at 76.7% of performance at that time. The second half for us, we will be comparing to lower sales growth from the previous period. So I think the trend for sales will continue into the second half, which is positive, but we don't expect for reversions to improve. So we are anticipating that reversions will get softer in the second half, and our priority, as George mentioned earlier, is in maintaining our portfolio occupancy.
用中文好快咁講啦，即係喺我哋睇到嚟緊下半年嗰個銷售額都繼續都會有挑戰嘅。咁喺個續租嘅租金調整啦，都好審慎都講唔到係太過樂觀啦。因為個市況的確對好多我哋嘅租戶整體嚟講都唔容易。咁呢個唔係就係租金啦，喺各方面啦，銷售本身啦，佢哋其他營運嘅成本啦，工資各方面都有升幅，咁令到佢哋嗰個 利潤係調低咗，咁對於有某一啲租客的確有挑戰嘅，咁所以我哋去支持某一啲租客嘅，始終都要有適當嘅租金調整。咁但係頭先講咗個目標啦，出租率我哋相信都會持續喺一個即係97、8呢啲咁樣嘅位，咁希望可以保持得到呢個狀況嘅。至於去揾投資者去同我哋一齊去發展我哋講緊領展3.0呢一個計劃，咁係一直做緊嘢嘅嚇，咁希望有機會不久將來我哋可以講多啲啦。咁你睇得到嘅就係喺我哋人手方面，喺呢一方面嘅人手過去呢幾個月都有增加。咁一直喺度做緊準備功夫啦，咁希望可以盡快有多啲消息同大家分享。
Thank you. We receive a question from PRE online. A very similar question to the first question. What is your plan to build out the third-party capital investment management business? The second question is, what will be the focus sectors and geographies for the IM business?
Thank you. I think the plan is very clear. We wish to work with capital partners that will enable us to buy and invest jointly with them in assets that we can continue to get superior performance from that we may not otherwise be able to get without working with those partners. There are a number of skill sets which the company has. The first and most obvious historically has been focused in the retail sector. But clearly the company over the last half of the decade has been investing in the other principal real estate sectors as well. And it's been making those investments with great success, and there has been some very strong performance. So we will be sector diagnostic. We will look to be operating and working assets as hard as possible. The team that will be leading it is led by John Saunders and is in the process of being firmly established. And it will really be focused on improving the returns for unit holders as well as the new real estate investors alongside the unit holders. Thank you.
Thank you. Any more questions from the floor? Because time is running short. Okay, one more.
證券時報嘅記者想問下，今年4月份中國證監會將 REIT 納入咗滬深港通，咁而家喺度深入咁推進緊啦。想問下呢個對公司會帶嚟點樣積極嘅影響，同埋公司會對呢個有啲咩期待呢？唔該。
George，個政策就出咗嚟啦。詳細嗰啲條款係未出㗎啦，咁我哋仲等緊啦嚇，即係我哋整個行業都等緊嘅詳細嘅政策啦。咁當然啦，即係嗰個目的就係希望可以有機會吸引得到國內嘅投資者喺經過呢一個互聯互通嘅機制去投資得到領展嘅單位。咁呢個俾到我哋一個新嘅投資者嘅一個新嘅投資者啦嚇，咁呢個我哋希望可以盡快可以落實啦。咁令到即係個流通量會提升，咁呢個都幾好，會幫到香港嘅市場啦。
好多謝。有個網上嘅問題係明報問嘅，有兩部分。第一部分係上半年分派好於市場預期，係咪預示有啲利好嘅因素可以支持派息持續增長？第二部分就係想請教有關領展3.0嘅進展，因為市場都非常關注現時有一啲大地產商，好似香港置地嘅新策略，就係停止呢個建售物業 build and sell 嘅項目，又會分拆 REIT。領展對於呢種改變嘅睇法同埋潛在嘅競爭有咩睇法呢
？I'll deal with the 3.0 port and then hand to KS about the distribution part. I think from 3.0, our strategy remains unchanged. We're cognizant, and obviously as with others, we've seen the announcements of Hong Kong Land and indeed other companies They're good, they have good strategies, and they have strategies which are fit for purpose, I'm sure, for their shareholders and their company. 3.0 will remain a focus for us to improve the shareholder and unit holder returns for Link, and with the principal activities of being aligned with the new real estate capital partners that we will work with. And we will retain the ability to be agile and to be sector diagnostic and to go where there is value and pricing dislocation, which will benefit in a similar way both our unit holders and the investment partners that we will work with. KS.
Thank you, Duncan. So thank you for the question. I think as you have seen the share price reaction and the results, clearly I think we have delivered a solid set of results, surprised the market on the upside. I think second half, going into the second part of the financial year, as what Greg has said, we will continue to focus on delivering operational excellence, working with tenants to deliver the best performance that we could as a team. I think the other factor to watch out clearly is a huge chunk of the cost is the finance cost associated with the gearing, and depending on how rates go, that also has a big impact on the distribution. So we have done well first half at a very competitive average borrowing cost. Hopefully second half the market supports us in terms of rates cut cycle. Other than that, I think the message that Greg has also highlighted is that we do see the need to continuously help our tenants as they go through this difficult period, as they adjust through some of the structural changes in the market.
Thank you. I will ask the last question from mainland media in Chinese， 係每日經濟新聞喺網上面嘅問題嘅。咁呢個係最後嘅問題啦。領展收購咗萬科喺上海七寶中心嘅股權，接下來公司喺內地是否還有其他收購嘅計劃呢？類似七寶嘅項目喺收購後將會點樣營運呢？
George。
收購咗七寶嘅呢個廣場，第一我哋就由原來我哋50嘅時候咧，就係萬科旗下邊一個管理商場管理嘅公司啦，引力去負責管理嘅。咁我哋已經喺之前即係早幾個月咧就開始咗我哋全權去管理呢個物業啦。咁呢個令到我哋可以用得到領展過去咁多年嘅營運嘅經驗，咁令到個商場做得希望更加好啊！咁第二嘅就係亦由萬科廣場轉咗做領展廣場啦。咁呢個喺我哋國內個品牌嘅提升啊，咁喺商戶嘅認知，對於領展呢個品牌嘅認知咧，亦希望有提升，咁幫助我哋去同接觸得更加多嘅租戶啦。有一啲租戶喺七寶喺其他商場我哋冇嘅，咁亦希望可以帶到佢哋去我哋其他城市嘅商場。咁當然我哋亦希望可以有其他嘅交流。嗰個當時引力嘅團隊亦全部都參加咗作為領展團隊嘅一部分，咁我哋都好高興佢哋嚟參與咗我哋嘅團隊啦。咁希望我哋繼續可以揾到類似嘅喺價錢方面、地方增長潛力同埋運作都有咁好嘅機遇啦，因為喺七寶呢個我哋睇得到仲有長遠嚟講仲有好多增長空間，因為仲有2條地鐵線嘅會喺嗰度通過嘅。咁當嗰2條地鐵線通埋嘅時候，我哋相信個人流會更加比而家更加好啲。
Thank you. Thank you, gentlemen. This brings us to the end of today's news conference. Thank you very much for joining us. Thank you.